Good afternoon, everyone. Welcome to this webinar on how to conduct independent examinations. My name is Rosemary Peters-Gallagher. I'm the chair of the Charity Not-for-Profit group within the Ulster Society. You're very welcome this afternoon. I'd like to especially thank Gareth McLeanan, one of our members, for tracking Margaret down. Margaret is involved and is a member of the Association of Chartered Independent Examiners, and we're really looking forward to hearing what she has to say. There's quite a demand for this. We have over 200 enrolled on the webinar, and we're very much looking forward to what Margaret has to say. So without further ado, I'm going to hand over to you, Margaret.
Thank you very much. Yeah, I've been an independent examiner for around 12 years now, and gaining experience all the time. Every charity I work with is different. So having done one independent examination doesn't mean that everyone is going to follow exactly the same path, and we'll have a look at why that is as we go through this session today. I'm just going to start to share my screen. Okay, so today is an introduction to independent examination. We're not going to be able in the 45 minutes or so to go through exactly everything that you would do in an independent examination. So the aims of today's seminar are initially to talk about what is an independent examination and how you might prepare for an independent examination, then go on to actually undertaking an examination, and finally the reporting obligations of an independent examiner. It's not simply to produce the independent examiner's report. There are some further obligations on an independent examiner that some of you might not yet be aware of. So an independent examination is a form of external scrutiny of charity accounts. It was originally introduced in 1993 for charities in England and Wales, and in Scotland in 2005. So independent examination as a process has been around for quite a long time, although in Northern Ireland it's a relatively new type of scrutiny for an organisation to have. However, it's now a legal requirement for all charities in Northern Ireland to have some form of external scrutiny, whether that's an independent examination or an audit. So all registered charities must have that external scrutiny of their accounts. It's less onerous than an audit and is a lighter touch with no automatic verification of vouchers. You do not build up a body of evidence to support an opinion on the accounts, but it does, however, as we'll have a look at later on, involve a review of the accounting records kept by the charity and a comparison of those records to the actual accounts that are produced, and highlights any issues with the accounts to the reader of the accounts. And depending on how an examination is undertaken, it can actually uncover some issues that an audit might not have picked up just because there's a difference in the process. Some of that comes with experience and knowing what you might be looking for with a charity and what kinds of income and expenditure might be open to either misstatement or that may lead to the charity having a previously unknown tax or VAT liability. It provides an external review and a report to accompany the accounts. And that report is a statutory report. It's laid down in legislation that an independent examiner has to produce that report. And it provides the readers with a degree of confidence in the picture of the charity presented by the accounts. Unlike an audit that gives a positive opinion, an IE report gives a negative assurance. We say that nothing has come to our attention to suggest that there is anything wrong with the accounts that are produced, rather than where an audit statement gives a positive assurance that the accounts do show a true and fair view of the accounts. So just a summary of that so that you've got a copy of it in your notes when you get the PDF of these slides. So an independent examiner's report produces a negative assurance that no matter has come to my attention that there's anything that might be awry with the accounts, whereas an audit gives a positive assurance that these accounts present a true and fair view of the state of the charity's affairs and of its incoming resources. The specific duties of an examiner are laid down in the legislation, and in the last few slides I've got the details of the legislation that you would need to go to read the full details of what's required. You must carry out the independent examination in accordance with the Charity Commission's guidance. You must make your independent examiner's report to the charity's trustees, and you must consider if matters of material significance have come to your attention during the examination, which give rise to that legal duty to report to the Commission. So that's that part that I mentioned earlier on, that there is a further duty not just to produce your examiner's report, but perhaps to report on to the Charity Commission. Now, in Northern Ireland, part of the Charity Commission's guidance is that there are directions that independent examiners must follow in the process of carrying out an independent examination. And there is a list in a document called the Independent Examination of Charity Accounts Examiner's Guide, and that's CCNI ARR 07. And it lists all of these directions and gives you a bit more information about them. And we're going to look at each of these in turn over the next wee while. So there are 12 directions. Most of them are applicable to whether you're examining receipts and payments accounts or accruals accounts. The only one that's not is number 10 there, that is about estimates, judgments and accounting policies. And most of that is not relevant for a charity preparing receipts and payments accounts, because they're a factual record of the receipts of the charity and the payments out of the charity. So there are few estimates and judgments that are needed, and there are no accounting policies that need to be disclosed. Before you start an independent examination, you have to ensure that you have the necessary skills, experience to carry out a competent independent examination, and where you're a member of where you're required that you're a member of one of the listed bodies. Now, as a member of the Institute in Northern Ireland, then you will be a member of one of those bodies. So that's necessary if you're preparing accruals accounts. But it's an interesting one to say that you should have the necessary skills and experience to carry out a competent independent examination when you're still fairly early in regulation, and not all that many people will necessarily have those requisite skills and experience. And that's where ACIE can come in, the Association of Charity Independent Examiners, to provide training in undertaking an independent examination. But if you've worked in a charity or within the sector, you probably have some knowledge of the wider sector. You may have been a volunteer in a charity, or you may have worked for a charity. And through that interaction, then you're likely to have some experience of the charity sector, even if you've not yet undertaken any independent examinations. There are sometimes small charities can be much more complicated than larger charities. I work with an after-school club with an income of over £350,000. Their income and expenditure is very straightforward. They collect fees from the families of the children attending, and that pays for staff costs, room hire, toys, games, etc. But I also work with a charity with a much lower income, which is around £50,000, but it's got a much more complicated income structure, which includes trading, donations, grants, and payments for charitable activities to other organisations. So the amount of income of a charity doesn't necessarily directly tie in with how complex an examination might be. This session is just a taster of what undertaking an IE entails. However, ACIE do offer a 2-day course in undertaking independent examinations for charities preparing fully accrued accounts, and also for receipts and payments accounts separately. And hopefully, if anyone wants to do that course, you will go away feeling that you have at least some of the skills necessary to carry out a competent independent examination, although it's always the case that practice makes perfect, and the more examinations you do, the more experience that you're likely to gain and become better at examinations and more competent as you build your skills and knowledge. In terms of preparation for an independent examination, you have to understand the charity. It's essential to understand the objects of the charity and its constitution, and those objects or charitable purposes are written in the charity's constitution. And the reason you have to understand that is that you need to be satisfied that the charity's spending is in line with those purposes. So unlike businesses who tend to have very wide objects or descriptions of what they are allowed to do legally, charities' descriptions and purposes are much narrower, and a charity cannot spend outside its own charitable purposes. You also need to understand the structure of the charity, its management, staffing, who's making the day-to-day decisions in order to know who is authorising any payments. You also need to understand the accounting systems and procedures that the charity has in place, as you'll be reporting on whether proper accounting records have been kept. And you need to understand the assets and liabilities of the charity, as you need to know whether the charity is solvent and whether the accounts have been prepared on a going concern basis and whether it's appropriate for them to have been prepared on that basis. You need to understand where income has come from and what purpose and for what purpose and how it has been spent to ensure that any of those restricted funds, that's money that comes in for a specific purpose, have been accounted for correctly and that expenditure is within the charitable purposes of the organisation and within any restrictions. Can you carry out the independent examination? Well, we have just had a look at questions that say, am I competent? Have I got the skills in order to do that? That you need to understand if you can carry out an independent examination. Can the charity actually have an independent examination? And we'll look at that in a little while. Am I independent of the charity? What kind of accounts does the charity prepare? And what am I being asked to do? And all of those together will determine whether you can actually carry out that independent examination. If it's appropriate, then you have to comply with the Proceeds of Crime Act and the Money Laundering, Terrorist Financing and Transfer of Funds information on the payer regulations. That's a bit of a mouthful, and most people tend to refer to them as money laundering regulations, but you have to make sure that if it's appropriate that you comply with that. So make sure that you have carried out a risk assessment of the client, verify that charity exists, and have proof of ID of office bearers and or senior members of staff and the trustees. Further in preparation, so that in considering that the money laundering regulations, do they apply to you? Well, yes, if you're charging for your financial services, they will apply. And if you're providing services outside of your main business, if you work as an accountant in practice, but you're working outside of the firm in doing independent examinations, if you're charging for your own services, then you are more than likely going to have to register yourself with the money laundering regulations and perhaps with HMRC or with your accounting body. You have to risk assess your business and the new client. You have to undertake formal ID procedures for the charity and key personnel and keep those records relating to that risk assessment and ID checks. But just to recap on the required skills and experience, you have to have knowledge of the appropriate legislation and regulations, knowledge of the charity sector in terms of the size and complexity of the charity that you're working with, and skills to understand the charity's accounting records. I think I work with around 20 charities just now, and each of them keep their accounting records in slightly different ways. I have some charities using QuickBooks, some using a specific charity accounting software, a lot using Excel, and one or two who still keep paper records. Whichever it is that the charities keep and they're comfortable to keep is fine, but you have to understand the system that they're using. And you have to have experience of charities of a similar size and complexity. You also have to consider what you're being asked to do. It's often a dual role when you prepare accounts. Quite often when somebody comes to your door and they're unlikely to say, we have prepared accounts that comply with the Act and regulations, can you examine them? They're more likely to come to you and say, can you do our accounts? Or can you sign this bit of paper that says you've done an independent examination without actually having done anything? And I have had a couple of charities ask that. Strictly speaking, the independent examination is the comparison of the accounts prepared and the records, but quite often you will also be asked to prepare the accounts. But when you prepare the accounts, it's on behalf of the trustees, and the accounts must be signed before your report. So the trustees have to approve the accounts and the report prior to you signing them off. And that might be on the same day and at a slightly different time, or a day or two apart. In terms of examining the accounts, I much prefer to do an IE while they're still draft. So at a stage prior to the trustees approving them. And that's simply because quite often there are some changes that might need to be made, perhaps because income's not been recognised appropriately, and I would rather to do an IE while they're still in draft and have a discussion with the trustees about changing anything that needs to be changed. So let's have a look at the first direction of the Charity Commission's list of 12 directions. So this is an examination of the accounting threshold and check whether the charity is eligible to have an independent examination. So the thresholds are if the charity has gross income of £500,000 or lower, it is likely that they can have an independent examination. But you also have to check that there is no requirement for an audit written into their constitution, any other enactment, or by any of their funders or donors, or actually have a decision of the charity itself. So if the charity trustees have decided during the year and minuted a decision that says that the charity accounts must be audited, then an independent examination is not possible and the trustees will have to get the accounts audited. Don't rely on the charity to tell you that they can have an independent examination. You need to confirm that yourself by checking out the constitution, any funders or donors' letters. You also have to consider what type of accounts the charity can prepare. Receipts and payments accounts can be prepared by CIOs when they come into, when they're enacted. Now, they're not yet enacted in Northern Ireland, they are in the other jurisdictions. But when they do become enacted, then charitable incorporated organisations and unincorporated charities with a gross income of under £250,000 and where the constitution and the decision of the trustees allow can prepare receipts and payments accounts. And an independent examiner could be an independent person that the trustees consider has the requisite ability and practical experience. Accrued accounts are charities with a gross income of less than or equal to £250,000. Then the Charity Commission for Northern Ireland suggests that an independent examiner, the legislation says that an independent examiner can be an independent person who has the requisite ability and practical experience, but Charity Commission for Northern Ireland suggests that that a charity should engage somebody who is a member of one of the 12 professional bodies recognised in the Charity Act or is a full member of ACIE. And accrued accounts have to be prepared by all charitable companies and other charities where the constitution or a decision of the trustees directs accruals accounts. Quite often a charity's constitution will say that the charity has to prepare income and expenditure accounts, accrued accounts, or accounts that show a true and fair view. And in any of those situations, the charity should be preparing accrued accounts rather than the receipts and payments accounts, no matter what their income is. Accrued accounts with income over £250,000 and less than £500,000, as I said a minute ago, they have an independent examiner has to be a full member of ACIE or one of the 12 professional bodies recognised in the Act. And all charitable companies fit into that category, and other charities with income over £250,000, and again with where their constitution or an enactment or the trustees require accrued accounts to be prepared. Membership of ACIE, there are different classes of membership. If you're already a member, a chartered accountant in Northern Ireland, then you will be able to independently examine up to income with charities of income up to £500,000. If you become a member of ACIE and you're given a level of membership that allows you to produce accruals accounts up to £100,000, so that point 3 in the lower part of that table, then you cannot examine accruals accounts with a higher income than £100,000. So just be careful if you do decide to apply to ACIE, what level of membership you apply for and how that might restrict you in your work. If we move on to direction 2, this is independence. It's called an independent examination, so therefore the independent examiner has to be independent of the organisation. So you have to check for any conflicts of interest that might prevent you as the examiner from carrying out your independent examination. And you must not be influenced or perceived to be influenced by close personal relationships with the charity trustees, by being a major donor to the charity, or having control or significant influence over a funder of the charity, or through any day-to-day involvement in the administration of the charity being examined. So if you're involved on a committee of the charity that involves you influencing or being involved in the day-to-day administration of the charity, you cannot independently examine those accounts. And you must ensure that there are no matters or potential matters that would reasonably give rise to a perception of your independence. It's not necessarily directly whether you have independence, but it's whether you could be perceived to be independent as well. It's a personal appointment. It's not your firm or organisation who are being appointed. It's actually the person who's the independent examiner, and it's the independent examiner who should be carrying out the IE and signing the report. Now, in a bigger firm, often it's a partner who will sign the report, and somebody else will do the examination, but that's always done under supervision of the person who's signing, and they must have knowledge of exactly what the examination entailed and what processes were undertaken. You can be a member or supporter of the organisation as long as you're not actively involved in the administration, but just be careful about that in terms of whether there is a perception of your independence if you are a member or supporter. If you have some knowledge of the organisation, maybe not in relation to the management or the administration of the charity, how comfortable would you be in that situation of having to report on that organisation? So just be careful. If there's anything that might influence you in your decision making, then don't take on that IE role. You can't review your own work, and you can't. And that's why you can't be involved in the administration of the organisation. You cannot be related to a trustee or a major donor or beneficiary. You cannot be a key management personnel of the charity or of any subsidiary, and you cannot be a spouse or a civil partner of any of those linked people either. Direction 3 is about documenting your examination. Now, in most areas of business as an accountant, you'll be used to documenting all of the processes that you undertake, but you have to do that as part of the legislation, and you have to be able to show that your records will back up any conclusion that you come to in relation to the examination and anything that you write in your examiner's report. In terms of working papers, you will have permanent information relevant for more than 1 year, such as the constitution, the charity register extract, list of the charity's assets, etc. And you'll have current information that changes year on year, their accounting records, the breakdown of their accounting figures, the final bank reconciliations. They might be third-party or examiner generated, but they all have to be kept for 6 years. Probably before you start any examination, you want to complete a new client inquiry form that gathers all the information about the charity and records that you followed the correct procedures in terms of identifying whether you're independent or not, and whether you can undertake the examination. If it's a continuing engagement, then you need to review and make sure that all of that is still relevant. Have there been any changes in the law, regulations? Has the charity changed its activities, its key personnel, or significantly its income that might take it up into an audit threshold category? And reassess that independence, your ability, experience and competence. You'll probably have to contact the previous examiner, or you should contact the previous examiner to check whether there's any issues with previous examinations that you need to know about, and perhaps to get the detailed figures for the start of the year if the charity can't provide them, and schedules of totals for comparisons. And then issue a letter of engagement for the that covers the services that you will provide, the fee or billing arrangement, your right of access to books and records of the charity, because written in the legislation is that you have the right of access to any records that you deem to be appropriate, and also access to any staff, current or past, that may have the information that you require. Before you start, there's some practical issues that you might want to cover, such as who is going to be your main contact in the charity, key dates, do they have a committee meeting arranged at which they want to agree the accounts, and do they have an AGM arranged, agree the timetable for your work, the dates when your work will be completed and when they'll approve the accounts, and what might happen if that has to slip because you're not being provided with information. And agree all of this in writing, even if you're not creating a letter of engagement. Planning your examination will depend on the size and complexity of the charity. You're not going to do exactly the same processes for a large complex charity as you would for a very small charity, maybe like a Brownie group or a Cub group. And record all the work that you've done that show all the directions have been followed, and the work, how you carried out the work, what was the objective of the different things that you did, what was your method, what were the results, and what was the conclusion that you can draw from that. And that helps to support all the conclusions that you might draw. And record where there's been any situations where you've had to use your judgment in terms of coming to that decision. And carrying out the independent examination, at the end of that, we have an independent examiner's report to create. And looking at the statements that you have to make in that independent examiner's report will help you to understand what you're actually going to have to look at when you're undertaking the examination. So you have to say whether anything has come to your attention to suggest that the charity has not kept proper accounting records. So you're going to have to look at whether the charity has kept appropriate accounting records. Do the accounts agree with those records? Because again, you have to make a statement that says whether anything has come to your attention that suggests that they may not agree with the records. And are there any other matters of concern to which the reader's attention should be drawn? Those first three are statements that you must declare, and your report has to cover those things. The final three points there: has the charity spent money or carried out activity out with its charitable purposes? Has any information been withheld from the examiner? And is the trustee's report consistent with the accounts? These are covered by a further statement that says that you've not found them out, but they're not quite the same as the first set. You just need to declare that nothing else has come to your attention. But these are the things that you would be reporting on. The reason I've got point 6 in brackets is that with a receipts and payments account, you're not having to declare whether the trustee's report is consistent with the accounts, and you don't need to directly state that. But with in that situation, if there was something in a receipts and payments account trustee's annual report that is not consistent with the accounts, then I would be wanting to have a discussion with the trustees to ask them to make some changes to improve the consistency. So in carrying out your independent examination, there is a document I've mentioned, the ARR 07, which gives the Charity Commission Northern Ireland guidance on undertaking an IE. There's the Charity Commission's 12 directions to independent examiners, and ACIE themselves have created an independent examination file, as have a number of other software providers who provide software for accounting firms to use. So we've gone through some of those processes of planning your independent examination, the things that we're going to want to think about before we start. So you have to gain an understanding of the Constitution, the organisation, its accounting systems, the activities and the nature of its assets and liabilities. where it gets its incoming resources from, and what it spends its money on, in order to plan your independent examination. Are there any special circumstances or problems affecting the charity? It might be something else that you want to ask. You'll also want to review the charity's trustee meeting minutes in order to understand how involved the trustees have been in making decisions regarding finances, but have they been planning major events, fundraising, etc., and have those actually happened during the year, or are they happening in future years? And you'll want to, as part of that planning process, also obtain details and the accounting records of the charity. You have to check that the accounting records are kept and not materially misstated. And the Charities Act defines a duty to keep accounting records. So you have to be sure that the accounting records kept by the charity are sufficient to show and explain the charities of the charity, and they're shown in enough detail to ensure that each financial transaction is recorded and the date that the transaction happened and what it was for. Recording that the charity has a record of the assets and liabilities, so not only the bank and cash transactions, but also the assets and liabilities of the charity. Now, they may not keep them in terms of a sales and purchase ledger in their accounting system. They might keep the records in a paper file, and that's fine as long as they have the records. And from that, you have to be able to produce the statement of account. So a charity cannot come to you with a dreaded box of receipts because they've not been keeping appropriate accounting records. They have to come to you with the accounting records from which the statement of account can be produced. And those records will vary from charity to charity. And as I say, most of my charities keep their records in very different ways. But at a least you would expect to see a cash book, bank statements and vouchers of some sort that support their income and expenditure. But there may also be, depending on the charity, salary records and, as I said, debtors and creditors, and whether that's kept in paper form or in their accounting software. Again, the charity must keep these for 6 years. So it's not acceptable for them to say, oh, we threw out last year's. You can't check that to make sure whether something was recorded last year as a debtor or creditor. They have to keep that information for 6 years. The absence of good, well-organised records may also point towards significant risk or misstatement or loss from the charity through fraud or theft. So actually having good accounting records can indicate that there is good financial management within the organisation. Direction 6 is that you have to check that the charity accounts are consistent with the accounting records. So you want to do some test checks between the accounting records through to the accounts themselves, what's been produced, and make sure that where things are being recorded is actually reflected in the final statement of account. You have to check that all fund and bank balances agree, and check the balances in the reconciliation of the statement of financial activities matches the balance sheet and the fund movement note, so that the check that the balances of funds held by the charity is the same across the statement of financial activities, the balance sheet and the fund movement note. If preparing the accounts you need enough information to do that, you can't just decide yourself how that should have been allocated. That the charity has to give you the information so that you can do that yourself. Fund accounting is particularly important here, and this is something that those of you who have not been involved very much with charity accounts may not have a lot of experience of, but you're having to report on whether a charity's funds have been spent according to the trusts that are placed on those funds. And this is a quick diagram that shows how the funds of a charity are organised. The charity may have unrestricted funds, where the trustees have full control over how they are spent, or they may have restricted funds where the donor has placed a restriction on how those funds might be used. It might be for a particular project, it might be for a particular asset that they have to buy using those funds. The courses that the ACIE run in relation to preparing fully accrued accounts and examining them, and also for receipts and payments accounts, go into the detail of what those restrictions mean and how you would determine that. But in today's session, we haven't got time to go into an awful lot of detail of that. So in Direction 6, we're comparing the accounts with the underlying records and that they're consistent with the restrictions placed on the use of funds according to that little chart that I've just shown you. And you might have some sort of level of judgment to make in relation to values that are given on the balance sheet and how the charities have valued any of the assets, and if that's appropriate in line with FRS 102, because charities preparing fully accrued accounts must comply with FRS 102. Direction 7 is that you have to check that any identified conflicts of interest and or related party transactions were properly authorised and disclosed. The Charity Act, while related party transactions are allowed, and transactions with trustees are allowed in certain circumstances, there is a specific process that has to be in place in order to recognise that it's a related party transaction, to record the transaction, to approve the transaction and report on that. And there is a section in the disclosure notes in the accounts that has to disclose whether there have been any related party transactions. And within the charity's records of meetings of minutes, there should be a record of any of those related party transactions. Where there are conflicts of interest, so where perhaps a trustee is being paid or a related party is being paid, or a company related connected to a trustee is obtaining work with the charity, then the charity should have a conflicts of interest policy, and the trustee involved should not take part in those discussions. And that again needs to be minuted so that there's a clear statement that they have not influenced how the charity is spending its money. So the trustee should be able to remove themselves from that process. That's partly because for any charity, any private benefit has to be incidental to the work of the charity. It shouldn't be the main purpose of the charity that trustees are being paid for the work that they do. Direction 8 is the analytical review, where you identify items to review and follow up for further information. And in reviewing that, you might want to have a look at anything that's unusual. Did the charity get new types of income this year compared to previous years? Are there any material differences? And you might want to speak to the charity trustees or gain supporting evidence to give you assurance that the accounts are not materially misstated. Remember that an examination is a comparison of the accounts with the records. In most situations, you probably don't need to go back to the source documents, the receipts and invoices. You have a look at the fluctuations in values and perhaps have a discussion with the trustees. You may go back to the records, but you don't have to. So if any questions arise, initially make inquiries of the trustees or staff. Verify to the source documentation only if their explanation is unsatisfactory, and then draw your conclusions. Direction 9 is that you have to check the form and content of the accounts. So could the charity prepare receipts and payments accounts if that's what's been prepared? And then in terms of fully accrued accounts, are they compliant with the legislation? So that's, are they compliant with the Charity SORP FRS 102? And also, if the charity is a company, have the accounts been prepared in accordance with the Companies Act in addition to the Charities Act? So in addition to the Charity SORP, do they also comply with the Companies Act? The form of receipts and payments accounts is not defined in the regulations. However, the Charity Commission for Northern Ireland do provide a toolkit with a pro forma spreadsheet, which can be completed and would include all of the things that are required if you use that spreadsheet. If the charity has prepared a balance sheet, when they should be preparing receipts and payments accounts, as long as no non-cash items have been put through the accounts, you can treat it as a set of receipts and payments accounts in Northern Ireland. It shouldn't really be a balance sheet that's on receipts and payments accounts. It should be a statement of assets and liabilities. With direction 10, we've got to check the reasonableness of any significant estimates and judgments and the accounting policies. So the charity trustees should have made their own estimates and judgments and should have a set of policies that they will apply to their accounts. You have to make a check whether they're reasonable, and if your judgments are different from theirs, then draw to the attention of the trustees and have a discussion with them about it. If there are inconsistencies with the SORP, again, you should draw attention to the trustees. But there should be a statement within the policies that says a particular aspect or a particular transaction is not consistent with the current SORP, and explain, the report should explain why. Trustees' annual report has to be prepared by the charity trustees, and you have to compare the trustees' annual report with the accounts for consistency, and you have to compare the narrative with the financial statements in order to find out whether there's any inconsistencies. So a charity might have said, we've got this huge fundraising campaign on, but there's no income from that. So that would be an inconsistency that you might want to explore. There should be a review of the reserves policy of the charities within that, and often that bit's missing. The trustees' annual report should have public benefit reported and a statement that the trustees have had regard to the Charity Commission's guidance on public benefit. Direction 10 is where we write and sign the independent examiner's report. So you have to review the conclusions that you've made from the records that you've kept. Are there any questions or issues that you might want to clear up or further discussion with the trustees? If you've not got any of that still to do and the work is complete, then consider your findings and draw a conclusion that will help you to prepare your report. It is important to realise that the report is a negative assurance. You're not going out to look for any problems in the accounts. You're only going to say that you have not seen anything that leads you to believe that the accounts or the accounting records don't comply. If you've identified a matter of concern, you should bring it to the trustees' attention in the report. Then you draw your conclusions, and that's the same slide as that we had earlier on, where you've got to declare whether the accounting records are not in accordance with the Charities Act, the accounts don't comply with the records, or they don't comply with the requirements of the Act. And are there any of the other matters to which the reader's attention might need to be drawn? You might need to create a qualified report, and that's where you highlight the areas of concern, and you have to give a statement of what the concern is and the financial effect on the accounts, and clearly state that all of the concerns are detailed. And that the example reports are given in the Charity Commission guidance, so you can look to them for any additional help. The duty to whistleblow is given in the Act, that you have to whistleblow to the Commission where you have found any issues such as material financial loss, particularly where it's deliberate and the trustees knew what they were doing. That might be false accounting, theft, misappropriation, or where the trustees have reckless and they should have known better, or they're abusing their charitable purposes. And that's given, there's guidance on that again in CCNI ARR 07, and also in a document called List of Matters of Material Significance. Then you finally get to your finally signing off the accounts. You probably create a management letter, which is the formal completion of your agreement with the trustees. If you've had to qualify your report, then explain why you've had to do that. If not, you can say that the charity is keeping appropriate records and that the accounts are compliant with the legislation, but it's also an opportunity for you to make some recommendations for improvements. I've got a slide here that gives some common errors that are found in accounts. Trustees' annual reports are often very poor. There are sections for fully accrued accounts that must be included, and they're not always there. And actually, I've seen situations where last year's report has been included this year, and they've not put any effort into explaining what the charity is actually doing during the year. Fund accounting can be poor, and charities not understanding the difference between unrestricted and restricted funds. Fund transfers, so transfers between restricted and unrestricted funds, are not normally allowed, or in some charities that have branches, they're treating, they're double counting income and expenditure, and where transfers between branches in the main charity are sometimes included expenditure with the branch and income. So income into the main charity, which would double count that income because it will already have been recorded in the branch. Endowment funds are very specific to charity accounting, and if you do have charities with endowment funds, then I would encourage you to read up more about that. The presentation of the SOFA and balance sheet are given in the statement, the Charity SORP, the statement of recommended practice, and you should follow that. You don't have to use the same headings, but you should follow the basic principles of that. Grant recognition is also very poor. Again, we would go into that type of thing in more detail in the 2-day course that the ACIE run. But there is full detail of how to recognise income within the Charity SORP. And then there's often errors and omissions in the notes to the accounts, the disclosures given in the accounts, and the dates of signing. As I said, the independent examiner's report needs to be signed after the trustees have signed, and often that's not the case. And then these slides, which will be in the PDF that you get, just detail the legislation, where you can find all of the detail of the legislation in Northern Ireland, and the sections that give you the detail. I've detailed the different sections here in each of the acts and in the regulations. So that's the end of the quick presentation on independent examination. I know it's been a bit of a rush through, but hopefully it's given you a lot of detail.
Margaret, thank you very much for that. As you say, very comprehensive presentation, and we've quite a number of questions here. If you can get your breath back and want to have a go at answering some of them.
Yep.
There's a few around what should be reported to the Commission, and you had a slide on that, and you could do a whole session on that on its own, because I know it's quite complex.
Yeah.
So we'll just go down them maybe as they come up. Should unresolved P11D issues be reported to the Charities Commission? And this is particular reference to a car being provided.
Part of what you have to do as an independent examiner is ensure that charities are paying all their appropriate taxes. Mm-hmm. So yes, I would. Part of the reason for reporting to the Charity Commission is so that they can gain knowledge of what is happening in the sector. It's not necessarily about what specific charities are doing, although they will look where they have a material issue. Mm-hmm. But it's also, if a number of charities that are all reporting similar issues, then the Charity Commission can produce additional guidance on that. However, I would be encouraging the charity trustees to be re-reporting on any issues that an examiner comes across, so that they are paying the appropriate taxes that they should be paying. And that works on the flip side as well. I have had charities who've not been claiming statutory maternity pay. They thought they were, but they weren't, and they hadn't produced the appropriate reports to HMRC. And one charity in particular, we managed to reclaim £4,000 for them, which was a huge amount for them to reclaim. So yes, doing those checks is essential for the charity, but also essential partly for your integrity as well, because if you've uncovered that, then you have to report on it. Yes.
Yeah. And I know the attitude for the Commission here is normally if in doubt, report.
If in doubt, report, yes.
Yeah. There's another one about reporting then. Is it normal for loans of greater than 20,000 to be made to chief executives of a charity which is primarily funded by government grants? And
sorry, I didn't catch the beginning of that.
Is it normal for loans of greater than £20,000 to be made to chief executives of a charity which is primarily funded by government grants? Should this be reported to the Charity Commission?
Well, you certainly have. I mean, if they're preparing accrued accounts, you have to be reporting all of those in the accounts anyway. Mm-hmm. It would partly depend on whether everything is being reported appropriately. and whether the Constitution allows for anything like that. And that's partly why you have to always go back to the Constitution, because you couldn't make that kind of loan in normal circumstances. I think it would also partly depend what it's for. I don't think any charities that I have interaction with would be giving loans to their trustees for anything. And that may well be out with the trusts that's been placed on any of the money that they have been given. And the government grants will have restrictions potentially on how their money is used, and it wouldn't be expected to be used for that purpose.
You'd have to wonder about the charitable purpose as well.
Yes.
Of doing that.
Yeah.
Another one about the report, Margaret. How would the report be worded if, for example, last year's records have been destroyed? Is it a simple wording paragraph, or what?
I mean, most of it is just write in simple English what has happened and be clear about what has happened. And partly that's a discussion with the trustees, that they may not have known that they had to keep records. And now that they have been informed that they're going to do that. So I would probably have a statement that says that this happened, but the trustees are now aware that they should be keeping all of their records for 6 years and are now doing so. If you make a qualified report, then you must report to the Charity Commission. So if you have any qualifications on your report, you must make a report to the Charity Commission. And yes, as you say, if in doubt, then report. So yes.
Absolutely. The next one is just a few words on the difference between general and designated unrestricted income.
Okay, so you would not normally have designated income itself. Income comes in as general funds to the charity. However, if you know that you've got a big project coming up, or you might be wanting in the future years to engage a new member of staff, and the charity has an excess of general funds, then the charity trustees can designate money for a future use. But you shouldn't be designating money just to reduce what's seen as the charity reserves. It has to be for a specific purpose, to be set aside for a specific purpose, and to be used within a reasonable time scale. Because again, any income given to a charity should be used within a reasonable time of it being given to them. People don't give charities money for it to be put in a bank account and left there and not used. With designated funds, the charity trustees at some time in the future could undesignate them, and they become general funds again that could be put to any use. If the funds had specifically been given towards the salary of a worker, that's the only thing it can be used for, and the charity trustees cannot change that without going through a process with the Charity Commission.
Okay, thank you. And you've answered the next one a couple of times. So should the trustees have signed off the accounts prior to the independent examiner signing? And
yes.
Yes, obviously.
But probably not before you're given them. That's what I said about preferring to have them in draft form. If they've signed them off, it becomes a wee bit more difficult then to have to go back and get it reapproved.
Okay, thank you. Receipts and payments accounts. So just a few words on the difference between a statement of assets and liabilities and the balance sheet. Obviously, we're thinking about prepayments and accruals and so on there.
So with a statement of assets and liabilities, we do not include prepayments and accruals within the cash balance part of that statement. That is only the top part of it is only recording cash movements. So the balance of cash either held as petty cash, as cash in the charity, or held in the charity's bank accounts. Below that, you make a list of assets and liabilities, but that is not reconciled with the cash to come to some sort of matching balance that we do with accruals accounts, where we've got balances that match in the statement of financial activities and the balance sheet. With receipts and payments, it's purely cash movements that we're recording. I
think sometimes accountants struggle to get their heads around that.
I think they do, but I'm hoping that will actually change. There are more and more, particularly sole traders, who are using a cash-based accounting now and shouldn't be including any of that. So hopefully accountants might get used to that a little bit more. But yes, it is challenging to get your head around.
Yeah. The next one, and we're nearly there, Margaret, you're doing really well. Reserves policies. Would it be appropriate to report if the target length of time to achieve added reserves adequate reserve seems unduly long?
Oh, that's actually really difficult, because a lot of charities, particularly if they're working on grant funding that doesn't provide for full cost recovery, or only covers a specific project that the charity is doing, it can be really difficult to build up charity reserves. And I think in that case, it may be that it will take a long time, but all of these things are very dependent on the type of charity you're working with. And perhaps the reserves policy is actually inappropriate for the charity if it's going to take a long time to reach it, that they're never going to reach what they see as what they should hold in reserves, because at the moment they're not doing that. So perhaps their policy needs adjusting rather than the charity is going to take a long time to get there.
Yeah, I know reserves does cause charities quite a bit of anxiety on getting the policy right and then trying to fulfill it. So you can
and I think funders are often not willing to fund charities who've got a lot of reserves. So that's something to bear in mind. But the flip side of that is, as I said, charities are given funds to spend within a reasonable time of receipt. They're not given funds to tuck away for an indeterminate time in the future.
Absolutely. And you've done a good selling job, Margaret. You may not have this information to hand, but someone's asking how much does the 2-day course cost?
I don't have it to hand, sorry.
I'm sure we could get that out somehow. Those are all the questions we've had so far, unless there's any final, because we're just coming up to 1:30, so perfect timing.
So one of the other things that I had sent you a potential question, the aspect of independence. One of my suggested questions was about independence. If you're say a church treasurer who wants to swap accounts, or it's suggested that you swap accounts with a neighbouring church, and whether that's appropriate. Now, I know here in Scotland that is suggested to church treasurers that they might want to do that. My feeling is that you may not be seen to be independent if you're doing that, and actually, would you be prepared to report that something's going wrong in the neighbouring church if they're also examining your accounts, and they may then want to pick up things that are actually fine, but they want to comment on it because you've commented on theirs? So I would be very careful about doing that kind of swap with examiners.
Could be messy. Okay. I think that's us, Margaret. I know the slides will be made available, and this has been recorded and that will be made available. So I'd just like to thank you very much for all the work and effort you've put into this. And I know you had a new grandchild, I'm sure you don't mind me saying, just at the weekend, and you've been racing around. So thank you very much for your time. There's been great demand for this. As we said earlier, over 200 enrollments. So thank you so much. And no doubt we will be back to you for more.
Well, thank you. And I'm very happy to do more. And once we can travel again, I'm very happy to travel to Northern Ireland as well. That's not a problem.
Excellent. Thank you very much, Margaret, and good afternoon to everyone.